return on this investment is likely much higher if you build that audience and get it to that 1,000+ mark.
My first successful physical products brand was a sports nutrition company called Sheer Strength. I ordered my first line of product for $600. And I sold that for more than $10 million. A majority stake for more than $10 million. I still hold a minority stake, which will probably be another 8-figure payday at some point. That's a pretty good ROI, right? That is better than Bitcoin.
Yep.
That is better than any index fund, right? I mean, that only happens because you are now investing sweat and education and intelligence and time into something that is going to create an exponential return.
Now, there's a dimension of this. Did you have personally a passion in fitness products?
Absolutely, yeah.
And how key is it that you're passionate about whatever it is that you're looking to promote as compared to saying, I think, oh, that's a good idea, even though I'm not that emotionally invested in what it is?
Passion is an asset. It's not a necessity. Passion is an asset in a field of assets.
Right.
Time is an asset. Money is an asset. Connections are an asset. An audience is an asset. Passion is an asset.
Okay.
And all of these things make results happen faster, or they open up opportunities, or they give you the grit to keep going.
Right.
So talking about this with you is energizing for me. It's a passion of mine, which means at the end, I'll probably be sad it's over, right? Since this is my work day,
Right.
but at the end I'll be sad that it's over. I'll want to keep going.
Yeah.
Which means if another interview showed up, I would want to participate in it.
Right.
So that's an asset because it means that I can contribute more. It means that I can do more work because I've got more energy to do it. Now, for some people, all they have is money, but they have no time, or they have no specific interests or passions. So their best route is probably to be an investor. Great. It's your job to analyze the opportunities and deploy your best asset into however is going to best serve you. For some people, all they have is time. So for a while, they're just going to be trading that time for dollars until they find the thing that they want to focus on. And for some people, it's passion. All they want to do is get up in the morning and golf or play video games or whatever they're interested in. All of those opportunities can be monetized. I don't have that one passion, that one thing that I want to do all day. And I think part of the confusion that people get about passion is that they think it has to be found.
Right.
They think that there's one thing outside of themselves that they have to discover. And if they don't discover that one thing, then they're never going to be happy or successful. I am one of those people that doesn't have that. I love baseball. My dream is to own the Cleveland Indians. But after, 162 game season, I'm ready for a break. Now, come December, I'm ready for the season to start again.
Right.
But I think that even I, who am passionate about what I'm doing, don't have the one thing that I could do forever. And so I have more of a feeling that I pursue.
Right.
I have interests that I cultivate. I think passions and interests are cultivated, not discovered. We invest in them, we grow them over time, and it becomes an asset, but it is certainly not the only asset that leads to success.
So would you say, though, that that capitalism is an overarching passion for all these things that you're doing, that's kind of like the driving thing that is constant fuel for all these your respective activities?
I'd say that capitalism is a great word that represents my collective interests.
Yeah.
And I studied economics during the 2008 political election while I was building my first business and the economy was tanking.
Right.
So my interests just happened to be business, politics, economics, and talking. And so capitalism and leading a message of capitalism happens to well represent what I'm doing in the world.
And now, I guess, in your own story as an example, so then you have a liquidation event. You from this business that you created in the way that you just described, how you do it and how you recommend other people do it, and then you pivoted toward investor. So because now investment's a part of what you do. And I think, again, going back to that scenario of somebody like a dentist or somebody in that realm that says, I've been working for a lot of years, I've got really some capital now. And I really don't know how to think like an investor or how to approach, making investments. Do you have anything to say about that?
Yeah, so just to complete the point, I think that if you don't have a side thing or a business that is not connected to your time, the first thing you should be investing in is that.
Right.
And if you don't know what that thing is, then the thing you need to be investing in is a skill set that you can take to clients or customers and sell in the marketplace. So whether that is running advertising or it is, I know somebody who charges $20,000 to set up a podcast, right? Because he's one of the best in the world at submitting your podcast to iTunes or whatever, whatever it is, right? So the first thing is, do you have a skill set that you can take to the marketplace? And for a lot of people, and I've seen this work really well for people, they take their job and they go take a couple side clients and say, this is the result that I get for people. These are the connections that I have from my 20 years of experience working in the corporate world.
Right.
I can bring this to your organization and I'm gonna charge you $4,000 a month. And since now that is your side hustle and that's your first skin in the game to have your first business.
Right.
And if you're building an audience while doing that, getting clients is really easy, or selling product is really easy. I know, for example, I have a friend who's a medical doctor, and this medical doctor puts a lot of content out just on his own personal Facebook page. And on that Facebook page, he talks about inflammation and reducing inflammation and his opinion on inflammation and why it's a problem. I don't know anything about this, but he talks about it at length. Well, one day, just on a whim, he posted on his Facebook page, look, I'm thinking about developing a supplement that would meet my criteria for something I think someone should take or something. And he had about 100 people respond to that. And he started taking deposits for this first product and delivering it in bags, like Ziploc bags, which looked super sketchy, by the way. And he pre-sold 100 units at, I think he sold like a 3-month or 6-month supply for $1,000, right, which funded the build out of the entire business, which he'll now get feedback, blood work from these patients.
Right.
And asterisks, I hope I'm not violating any medical claims by.
I think you're okay so far, and you haven't mentioned any names, so you're good.
Okay. So he'll document their results, share them, and now he's off to the races in terms of having a business that he can scale. In the same way, I have a student, her name is Sophie. She lives in Australia, and she has a little company called Seed and Sprout. And Seed and Sprout sells environmentally friendly kitchenware.
Right.
So that would be, she has a reusable containers that are made of like aluminum, or she has reusable bags that she sells. And she developed her first prototype. She ran a Kickstarter, posted it on her personal Facebook page, said, here's what I'm up to in the world. This is my prototype. I wanna take this bigger. Can you help? Her first product was this lunchbox that she sold. And she did $25,000 in pre-orders.
Nice.
She did 3 things well. She posted about it on her personal Facebook page. She went to 10 personal friends who are passionate about the topic and said, can you please talk about this on my behalf? And she went to a couple Facebook groups, so like influential type of Facebook groups that were like 10,000 people.
Right.
And they said, this is what I'm up to. I'm running a Kickstarter. Can you help? And one of them said yes. And that cumulative effect from all of those different touch points created $25,000 in pre-orders for a lunchbox.
Wow.
That's enough. That's enough to get the ball rolling. Right. So that's the first thing that you should be investing in if you want to have a side thing.
Right.
From there,
Right.
I think you should be investing 10% of your take-home pay into long-term wealth building assets that you never touch.
What's an example of that?
Yeah, so for me, my favorite is dividend paying stock, which is super unsexy and boring.
Right.
But I love dividend paying stock because they have a double compounding effect. A double compounding effect is some stocks, we call them dividend aristocrats. To give that a Google. That is a term that refers to companies that raise their dividend every year for at least 25 years. a dividend aristocrat. And so if we look at a company that has raised their dividend every year consistently and predictably, there's a compounding effect that happens to that, because year one, you're getting $1.
Right.
Year two, you're getting $1.20. Year three, you're getting $1.40, $1.60, $80, $2 forever and ever. Amen, hopefully. And so we have a compounding effect that's happening from the raise of the dividend. But I reinvest my dividends into more stock.
Right.
So that creates a second compounding effect. So we're buying more stock, which is giving us more dividends, which is buying more stock, which is buying more dividends. And so we have a snowball that starts to roll. Compounded over 30 years, I'm yet to see any investment on the stock market outpull those numbers,
Right.
because you get two compounding effects compounding against one another.
Right.
So if someone can show me a better strategy, I would love to see it. I've had this debate with a bunch of financial planners, and my numbers always check out.
Right.
Of long-term dividend paying stock outperforming just about anything else in the stock market specifically. Now, with that 10% going to that, the next thing that I do, and again, I'm not recommending any financial advice, but what I do is I take my profits at the end of the quarter or the end of the year, and I'm buying cash flowing assets. A cash flowing asset to me is real estate or real estate syndications or real estate investment trusts. It is, I buy web businesses. My favorite is websites, because a website that profits $1,000 a month almost passively with a few hours a month of maintenance can be sold for $20,000 to $25,000. That's a pretty good deal for somebody who's just looking for an extra $1,000 a month. And there are some interesting tax suggestions that some CPAs will look at and analyze. CPAs, I've talked to several that disagree with one another, but I've heard some very interesting proposals on how you could classify websites as an asset to be more tax efficient, similar to real estate. Real estate, you get certain write-offs.
Right.
Web properties and web businesses have some similar types of classifications, so it could be very tax efficient income. This would be investing in someone else's business. Right? We're looking for a way to passively be involved in something that is producing cash flow for us. So I like real estate investment trusts, which are publicly traded real estate companies because they pay really high dividends. I like websites because the ROI is just absolutely absurd and they're a sellable asset, and I like investing in businesses. So the first thing is that long-term thing I'm never going to touch. And the second thing is I've now got savings, and I'm going to take that savings and I'm going to try and buy more income with that. But I'm only doing that every quarter or at the end of every year when I have my profits left over from my business.
Right.